What's up everybody, my name is Hemar and welcome to my channel. You've heard me talk about it and you've heard it on the news. But what is stock market investing? Let's start with the basics. Investing is something that creates you passive income, meaning you put in the money and you do the work upfront and then you continue to get paid again and again and again. That's why I don't consider trading as investing. Because day trading takes time and daily effort and energy, and that is not investing. Investing means you find a company you want to invest in, you buy shares in that company, and then you hold it for the long term, while possibly receiving cash payments called dividends. So when you're buying a stock, you're buying shares of a company. When you buy a stock like an Apple stock, a separate stock, or a NCB stock, you're a owner of that company. So you can easily buy shares of a public company using an online stock brokerage. A public company is one that trades on the open market, unlike the New York Stock Exchange or the Jamaica Stock Exchange. Some public companies you might be familiar with include Apple, Facebook, and Tesla. This is different from a private company which isn't traded on the public market. Private companies tend to be smaller, but you have some large ones as well. A private company can go public by filing what is called an IPO or initial public offering. Stocks are essentially valued by supply and demand. When people are optimistic about the economy, there are more buyers than sellers. The price of a stock will go up as the market moves higher. This is when you hear majority of the media start reporting things like, oh my god, the stock is doing amazing, people are making a killing from the market, you should get in now. Then people start to follow the hype, start buy stocks, and then this makes the market go even higher. This continues to happen until people realize they own shares of a company that's valued way higher than it's worth. So now what happens here? Well, now people who own shares in the company want to sell because they don't want to own an overvalued company. And people don't want to buy overvalued companies, so now you have more sellers than buyers. So now the stock market start to go down. And the media start reporting things like, the world is gonna end, sell your stock. An example of this was in February 2020 when the Dow lost 35% of its value, wiping out years of growth. So what should you do? Well, remember, I'm not a financial planner, so I'm not telling you what to do. You have to do your own research, but from my experience, find a company that people like and is innovating for the future, then wait. Be patient, wait for the market to crash or a correction to happen. And for the company you want to be undervalued and be on sale. Now this is when you buy and hold and wait for the market to go up. Now I know this is a very oversimplified version of how it all works, but the essence is buy when everybody is running away and start selling when everybody is too optimistic. As Warren Buffett would say, be fearful when others are greedy and be greedy when others are fearful. Now the last thing I want to touch on is how you get paid. Let's say you buy 100 shares of a stock at $10 per share. You'd have paid $1,000 plus brokerage fees to buy this stock. Now if the stock goes up to $20 a share, you only make money when you sell the stock. So if you sell the stock at $20 a share, you've just made $1,000 minus your brokerage fees. But if the stock comes down to $5, your shares will be in a loss. Now the only way you'll make money in this case if the company offers a dividend. A dividend is when the company literally pays you cash for holding on to the stock. And you will only actually lose money if you sell your shares when it is in a loss. If you're investing in good companies, you don't really have to worry too much because stock prices can recover in the future. You can also make money when a company goes under by doing something what is called shorting a stock. You're essentially betting against the success of the company, but this can only be done on more advanced stock exchanges like the New York Stock Exchange. This feature is yet to be introduced on the Jamaica Stock Exchange. If you want to learn more about personal finance and investing, please don't forget to hit the subscribe button, and if you have made it this far, just hit the like button as well. Thank you for watching. See you in the next video.